Hey y'all, Zach here. I want to talk to you for a minute about how first-time homebuyers can really take advantage of the unique strengths that they have in the market. That can sound a little bit confusing. You might be thinking, how can first-time homebuyers have an advantage? They haven't done this whole process before. They don't have equity built up in a house. They don't have the experience getting into the market that second-time, third-time experienced homebuyers have. However, first-time homebuyers do have one specific thing going for them, and that is first-time homebuyers have a ton of options available in the lending world that are really unique to them. And specifically, we're going to talk about FHA loans offered by the government and how first-time homebuyers can use those FHA loans to really get ahead of the market and get some weight behind them that experienced homeowners really just can't match in a lot of cases. So, how can first-time homebuyers use this FHA loan, and what does it let them do in the market? First, let's mention one side note before we get into this. You will have to talk to your lender and your real estate agent about what your specific options are for your situation. Everything I'm talking about here is sort of generalized, but when you're ready to actually get into the market, it's always good to go ahead and start bringing on your team and your lender and your real estate agent and start coordinating that whole process so that you know your specifics. So with that out of the way, let me also mention that we're going to be talking about an FHA loan, which is available pretty much everywhere. However, in every individual state, county, sometimes even cities, you'll find different programs for a wide variety of different lending situations. First-time homebuyers are really common targets for these unique programs. You'll have to, again, get that specific advice about what package is really right for you. So what is an FHA loan? To get an FHA loan, you'll have to qualify just like with a regular loan. They'll look at things like your income, your credit score, and those will determine the maximum amounts that you can finance and other features and details of the loan. The minimum down payment on an FHA loan is only 3.5%, which is where the biggest part of the strength of the loan comes from. That means that on a $100,000 house, you only have to put down $3,500. In a Nashville market scenario, you might be looking at, say, a $400,000 house, you're only going to be putting down $1,400 minimum on your loan. Along with that low down payment, an FHA loan will require you to pay a mortgage insurance premium, or an MIP. That's going to be a monthly fee that you pay on top of the loan. And essentially what that does is allow the government to offer these FHA loan packages and still keep that secure and make the program sustainable. The other key thing with FHA loans is that there are maximum limits that you can finance. In a given area for a single family, duplex, threeplex, and fourplex, you will have to look at what your local standards are for the maximum amount you can finance. Each individual city, and sometimes even different areas in a city, or sometimes counties, it depends on the area, will see a different maximum amount that you can finance on an FHA loan. And the final critical thing to note with FHA loans is that you do have to live in the unit for a number of years. So if you're going to purchase threeplex per se, which we'll talk about in a minute, you would have to live in one of the units if you finance it on an FHA loan. So what are some of the distinct advantages to an FHA loan in a residential setting for a first-time buyer? Well, an FHA loan lets a buyer get into the market sooner than they might otherwise have been able to. What this can do is help younger buyers, first-time buyers, people in a weaker financial position than someone really experienced, can start putting money into equity in a home rather than rent. With the MIP that's associated with the loan and the low down payment, you are going to be paying a lot of money towards interest and fees each month. So you do have to look at the situation and the math, but it lets you get started. It's a great way to launch into the deep end and start your home buying journey. One drawback to the loan is that because the FHA needs to keep this system and this program secure, you will have to meet additional requirements on the house. Most homes that you're going to look at will qualify for an FHA loan. However, it is going to hurt your offer potentially in a multiple offer scenario. To help you learn a little bit more about how to offset that, I'll be putting out a video here soon about winning multiple offer scenarios and what you can do to really stand out in those crowded markets. However, one key element that I'll go ahead and point out is that first-time homebuyers do have another advantage in that they generally have more flexible closing scenarios. So you might be able to close a little bit earlier or later depending on the seller's needs, and you can use that flexibility to help you get a little bit of leverage in the offer scenario. So last, let's talk about the real whopper behind FHA loans, and that's going to be the investment power of an FHA loan. This can really help first-time buyers set themselves up for the rest of their lives in the real estate market. For those of you interested in investment, you'll have heard about the concept of leverage. Part of the reason the real estate market is so good for investors and has such high returns compared to other markets is that almost every transaction in real estate is very highly leveraged. Typically, you only put down 20 to 50%, even on a commercial deal, towards the property. And so because you're financing 50 to 80% of the property, typically, the money you're using isn't your own, but you're still making returns on that money. That's what we call leverage. With an FHA loan, 96.5% of the money you put down isn't your own. That means that for a very small return on the value of the property, you're getting a huge amount of money return on what you put down in cash. And the FHA loan, although it has the requirement about living in the property, lets you purchase up to a fourplex and still qualify. Now, you will have to live in one of those units, so in a fourplex, you may not be making any money or may even still have a little bit of payment that you have to make out of your pocket. But if you can add some improvements to a property and find a good deal, buy it right, all the other investment advice that we'll cover in later videos, you can really set yourself up to have a huge return on your money on your first investment and use that to propel your investing career later on. Now again, you have to qualify to meet the FHA loan, not just by yourself, but also with the property. That can be a little bit tricky on investments because you're typically looking for something that has some issues that you want to add value to and fix. With an FHA loan, you'll have to buy a property that is pretty well set up on its own. So that covers the basics of why FHA loans are useful and how they give first-time buyers so much extra power in the market. If you want to learn more, the first step would be to contact your real estate agent in your local area and get connected with a lender who really knows their stuff about the various programs, options, and rules around what you can use to finance your property. The other thing you can do to learn more is follow, like, subscribe, wherever we're at. Join along for the next videos that are coming out. We'll be talking more about how you make your money stretch the furthest in your current and future homes. If you're already thinking about getting into the market as a first-time home buyer, leave a comment or send me a message and we can talk about the specifics for your situation. All right, can't wait to see you in the next video. Thanks.